Good morning, sir. My name is Wendelin Goyo. Today, I will discuss about taxation. So, taxation, when we say income taxation, it is a tax imposed on individuals or entities in respect of the income or profits earned by them. Income tax also in generally is computed as the product of tax rate, the taxable income. Taxation law refers to any law that arises from the exercise of the taxation power of taxes. It is the law that provides assessment and collection of taxes. And then these are the example of tax. The National Internal Revenue Code and the Tariff Tax Code, the Local Tax Code, the Real Property Tax Code. Sources of taxation law. The basics sources of the Philippines tax in the Bureau of Internal Revenue, which which quantifies all tax provision, the latest of which is embedded in the Republic Act number 84/24. The exemption laws, these are laws that grant certain immunity from taxation. The minimum wage law, the Omnibus Invest Code of 1987, and Barangay Microbusiness Enterprise Law and Cooperative Development Act. And the types of administrative issuances. Revenue regulation. These are issuances signed by the Secretary of Finance upon recommendation of the Commissioner or of Internal Revenue CIR. And then Revenue Memorandum orders. These are issuances that provide directives or instruction, prescribe guidance, and outline processes, operations, activities, workflows, and method and procedure necessary in the implementation of state policies, goals, objective, and plans. Now, Revenue Memorandum of Rulings. These are rulings, opinions, and interpretation of the CIR with respect to the provision of the tax code and other the laws as applied to specific set of facts. Revenue Memorandum Circular. These are issuances that publish pertinent and your applicable portion as well as implication of law, regulations, and precedents issued by the BIR and other agencies office. Okay. Types of rulings. Value added tax rulings and International Tax Affairs Division rulings and BIR rulings and delegate authority rulings. Okay. And then income taxation. This chapter discussed the concept of tax income, the status of income, and the type of taxation. The concept of gross income, the type of income gross taxpayer, and the general rules in income taxation, and the income tax situs rules. Elements of gross as income. It is return on capital that increases net worth. It is realized benefit and it is not exempted by law, contract, or uh, treaty. Okay. And then what is meant by realized benefit? Benefit. This term benefit means any form of advantage by the taxpayer. This there is benefit when there is an increase in the net worth of the taxpayer. And then the following are not benefit, hence not taxable. Return on capital. Capital means wealth or property. Gross income is a return on wealth property that increases the taxpayer net worth. Example, setting price, a selling price or 500 total return, and then cost 300 return of capital. Markup gross income 200 return on capital. Return of capital merely maintains net worth, hence it is not taxable. Improvement in net worth indicates an ability to pay tax. Capital items damp with infinite value. First is life, and second is health, and third is human reputation. And then types of transfers: bilateral transfers or exchanges, sale, barter. Two is unilateral transfer, succession, donation. And then not exempt by law, contract, or treaty. An item of gross income is not exempted by the Constitution, law, contracts of uh, treaties from taxation. Number one in income qualified employee trust fund, and two is revenue of non-profit non-stocks education institution, and three is SSS, GSIS, and Pag-ibig or PhilHealth benefits. Four, salaries and wages of minimum wage earners. And five, regular income ledger of barangay enterprises. And six is income of foreign government and foreign government owned controlled corporation. Lastly is income of international missions and organization with income tax immunity. And then the final income taxation, final tax is one of the exemption to the scope of regular income tax. An excellent understanding of the items of passive income and those taxpayers subject to final tax, including their final tax rates, is extremely crucial to your mastery of income taxation. Okay? The feature of final income taxation: final tax withholding of source, territorial imposition, and imposed on certain passive income and portion not engaged in business in the Philippines. The final withholding system is inherently territorial. It applies on only to certain passive income earned from sources within the Philippines. Okay. And then next is uh, rationale of final income taxation. The final withholding tax is built upon taxpayer and government convenience, convenience rather. Passive income. Items of passive income are earned with minimal involvement from the taxpayer. And two is, unlike the active income, it is generally irregular in timing and amount, and are not usually specifically monitored by taxpayer. And then the interest income subject to regular tax. Interest income from the following sources is subject to regular tax, not to final tax. And then number one, lending activities, whether or not in the course of business. Two is investment in bonds. And three is promissory notes. And four is foreign sources, whether bank or non-bank. Five is penalty for legal, legal delay or default. Dividends means any distribution made by a corporation to its shareholders earning or profits, and payable to its shareholders whether in money or in other property. And then exempt dividends, enter inter corporation dividends. And two is dividends from cooperation entities taxable as corporation are subject to 10% final tax. The 10% final withholding tax also applies to divide a dividend or share into the net income of entities considered corporation under the NI in IRC and special laws. Number one, real state investment trust. And then two is business partnership. And three is taxable association. And four, taxable joint venture joint account. And five is taxable co-ownership. Okay. And then passive income subject to final tax. Interest or yield bank deposit or deposit substitutes. Two is domestic dividend in general. Three is dividend income from real estate investment trust. And four is share in the net income of a business partnership, taxable association, and joint venture, joint account or co-ownership. Five is royalties in general. And six, prices exceeding 10,000. Seven, winnings. And eight, informer tax reward. And nine, interest income on the tax-free corporation covenant bonds. And then number application of the final tax on interest. Deposit, substitute, and government securities and money market placement. Four is trust fund and other investment evidenced by certificates prescribed by the Bangko Sentral ng Pilipinas. Taxability of stocks dividends. Normally, stocks dividends are exempt income tax. And then the passive royalty income received from sources with the Philippines. Passive active royalties. And royalties of the passive nature such as royalties of the claim owner or landowners or of mining properties. Royal of inventors from companies that manufacture and set their invention. And royalty from licensing agreements that transfer the user technology are just subject to 20% final tax. Okay. The entities exempt from final income tax rather. Foreign government and foreign government owned and controlled corporation. Two is international missions or organization with tax immunity. And three is general professional part, partnership. And four is qualified employee trust band. Okay, that's all, sir, and thank you.